Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, February the 23rd. The year's 2021. Let's talk trading, tactical entries. Just remember, these videos are for educational purposes only. Your results may differ from mine. Tactical entries. What am I talking about? I'm talking about entries that you have planned out and that give you some type of edge when you enter them. A lot of times when you're sitting there and you're looking at the trade, you're scalping, you're day trading, you're in front of the charts, you'll see possibilities like, oh, I could have had this many pips. Oh, I could have done that. Those aren't tactical entries. Those, if anything, are airball trades. No, you want to create entries or come up with a plan that gives you entries that have a statistical edge, that more times than not you have a chance of profiting over the long haul. We talked about trading like a casino a couple of days ago, I believe. Point being, you don't want to airball a trade, you want to do a tactical entry. So how would you come up with it? Well, first, you pick what you trade. Walmart and Walmart picked the pound dollar, and I switched over. I used to only trade dollar yen. So I switched over to trade what he trades so we could trade together. Doesn't matter to me what we trade. So we have certain entries. One of the entries is the Walmart method, where we use the sweet spots gold indicator. It spaces the lines every 10 pips, on the even numbers here. And a lot of times, what we say, what I show is you trade with the H1 candle color. Okay, and so if you look here, if you had taken the entry this hour, we had a high of, let's see, 11.6, so you might have taken a pip. Previous hour, that was good for what? Maybe 7 pips. And the previous hour, if you took that one, a couple of pips and maybe a pip down here, and then, once again, you took this trade here, and then if you took this trade here, you came, that was the McGilla trade for the day. So we have some very simple things, strategic entries, tactical entries. You should probably only have maybe 3 criteria, 1, 2, or 3 criteria to enter. So what's the criteria? Well, you have a green H1 at the line. That's criteria 1. Criteria 2 is you might want to look to the left and see if it's had any trouble breaking through at that level. So for example, here, it crossed the line but didn't close above it. Same here, same here, same here, same here. So you see that was 5, basically 6 attempts. So chances are, if this was your first trigger line, you probably wouldn't want to take that long after you see it. And you see here, lower high. Here, it made a higher high, but still lower than that one. And then ditto here, it made a lower and then lower too. So you might be a little hesitant, but let's just say you threw caution to the wind and you took each one of those trades. Well, let's just call this one a loser, but you had 4 winners. When it called that one a loser, you had 4 and 2, and then you had 5 and 2, and you cashed in big time. So if you're managing your risk and you only had a few pip loss, then your gains should have outweighed your losses. So that's part of it. So you want to have something really simple so you don't have to think about it, because you don't want to be thinking when you're trading. What you want to be doing is identifying and then executing. So you see the setup, then you execute. There's no thought about it. You've already determined that this is a setup. This is a tactical entry. This is something that you know based on your statistics, based on your homework, that when this condition presents itself, you're going to take the trade without hesitation. And that's the big one. When you start second guessing yourself, don't do it. Just take the trade. Put your stop loss on. You're either going to win or lose. That simple. Okay. And you know what your worst case scenario is, barring unforeseen circumstances, and that's you get stopped out. So, one of the reasons I brought this up is because I've been looking at other traders' videos and, doing some dinking around on some forums just to see, and then looking at a couple of Telegram chats, something new to me, people out there on Telegram. Um, and I've looked at a few things. And so that's one of the reasons I brought this up, because some people make things so complex, so complicated, so convoluted. Um, it's almost impossible. And that's why I say, if I can't code it, then I don't understand it. Because usually, when it gets down to code, it's pretty simple. It's if then else. you know, if this happens, then you do this, else you do something different. And so let me show you something. So here we're looking pretty much at the same lines, but Wall 9, we like to use the 3-level ZZ. So we added something. It's like, okay, we need to see a 3 ball at the bottom before we enter a trade. And so now we're going to let that candle close, look to reverse, maybe break the high of this candle here. And I'm not sure why this gap happened. That's kind of confusing me. I'm not sure. Did it happen on you guys' charts? And so here, once again, you see we had a 1 ball at the bottom, a 2 ball at the bottom. It needs to break a high of something. So here and then here. It's like, and I found out something today about order blocks. I read another definition of an order block, and it was kind of like a hindsight thing. So, for example, this new definition would be an order block because you see that high was broken, and so this one here, this could have been an order block. But basically, really, here's the order block down here, this one, and then you see here that high got broken. But I don't know if I'm going to use that one or not. I'm going to have to study it a little bit more because, I just think that things are being complicated. It's a lot easier to say, you know what, this is the highest bull candle here. So if you break the low of that, you go short. But personally, I'd rather use the holo and say, okay, here's the highest open, prices below it, and then you go short. Get you in a few pips quicker. But then I usually don't do that on M1. I look more to a H1 for the holo, or M15 if I really want to try and pinpoint it or be greedy. The problem is I like to see that H1 close and trade with the candle color, as you know. So once again, we have we have to have a ball at the bottom, and then we have to see, let it close. So that's like the get ready. Then we have to get set, and then we can go. So 1, 2, 3. Ready, set, go. And if your trading is any more complicated than a ready, set, go, I would urge you to take a look at what you're doing, get rid of anything that's truly unnecessary, and just create something simple that's repeatable, that repeats, that's simple and easy to follow, and that there's really no thought involved. Because that's the big thing is, when you think, that slows you down, and then you second guess, or you might hesitate, or you might try to think about something else. So because when you're trading, you don't want to be thinking. It's like when you play a game for most part, chess, yeah, you're thinking. But I'm thinking more, you're usually not thinking like, say, in baseball or football. You might be thinking in the terms of what you're going to do if the ball goes to my left. What's it going to do if the ball goes to my right? What's it going to do if it ball is hit to the field? depending on what position. If it's hit to somebody else, where do I go? Where do I position myself? You might think of that ahead of time, but once the batter hits the ball and the ball's in motion, you're no longer thinking, you're reacting. You've already planned it out. So you might say, okay, if this candle puts in a 3 ball or a 1 ball or a 2 ball, what am I going to do? Okay, I'm going to wait for the next. I'm going to let that candle close. Then I'm going to check out price on the next candle. So, and that's what you're doing. That's the state that you're in. You're not really thinking about other things like, well, what's the ADR and what's this and what's that? Because I think tomorrow I'll probably talk about tactical exits, because I had mentioned the Walmart earlier that it seems like there's more conditions for exiting than there are for entry. Once again, entry, ready, set, go. That's pretty much all you want to do. There might be some things also that prevent you from entering. So, as I mentioned before, you might look left and you might see that there's been some resistance or reluctance of price to break through a certain level or close above a certain level. So, for example, why would we want to go long above, say, 41.10 if prices hasn't been closing above that level very much? You can see here, you scrunch up the chart, it keeps coming back down. So you might want to just go ahead and if you're already long, it gets up here, just take your profit off the table. Man, sooner or later it might go up to the 20s or 30s, but that's just something to look for. And it's funny because earlier today, price had dropped, and Walmart and I were looking at something like, oh man, that would have been a great short. Neither one of us took it. But yeah, it was kind of after the fact. But then I said to him, I said, hey, Walmart price is down here in the 50. And, based on observation, it's either going to the 70s or it's going down to the 30s. It's got to do one or the other. And so we hitched on the long bus down here. I think I jumped in at 60. I said, I'm just basing it. Either it's going to 70 or it's going down to 30. So I'll just take my chances. Why? There's a 3 ball there. And if you can see, price doesn't usually stay between two lines. It usually moves, and a lot of time it'll cross two lines. So right here in the 60s, it crossed the 70, the 80, came up to the 90, came down to the 50s, and it did the same thing. So, just based on simple observations, you can do those types of entries. You say, hey, this is going to reverse off the 3 ball, and if it hits that line, I'm going long. And if it comes down to the other line, I might just stop out. It's not difficult when you keep it simple. But I think what happens to a lot of traders is you're looking for something that you're not going to find in trading, and that's a sure thing. There's a few sure things in trading, like price is going to move up and down. The high's usually going to be higher than the open, and the low's usually going to be lower than the open. There's a few sure things. The range is usually going to be above, a couple of pips, based on frequency distributions. So you have a few of those things, but whether or not, if I were to go long it or short right now, am I going to win or lose? I can't guarantee that. Nobody can. So just remember that when you're trading. Oh, and yesterday, I think it was pretty funny. Price was somewhere down in the bottom. I said, I don't see a trade. Well, price ran up about 30 pips from that. So maybe one of you guys out there, or females or non-binary traders, might have saw something that I didn't. So anyway, really think about your entries and make them tactical. Ready, set, go. Not too complex, keep it simple. And just remember, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out. And once again, if you're new to to my channel, make sure you subscribe and click like and click the bell so you get notified when I put those new videos out. And that pretty much wraps it up.